Hello, everyone. Welcome to the Carbon Equity Climate Tech Outlook 2025. I'm incredibly excited and so wonderful to see so many of you join us. Just a few housekeeping rules or instructions. For Zoom, we kindly ask you to ask questions through the Q&A section. We have a wonderful set of experts and I'm looking forward to a very lively debate, so please feel free to add anything you want to know, but please do so in the Q&A so I'll see it. There is also a chat, and so if you want to introduce yourself to the group, please feel free to do so, and you can send messages either publicly or privately to us also during the session. In terms of the agenda, I'll do a brief introduction about myself. So I'm Lisa, I'm one of the co-founders of Carbon Equity, and I'm Chief Climate and Strategy. But let me briefly introduce Carbon Equity and how we look at climate tech. Then I'll introduce the speakers. Then we'll mostly focus on the panel discussion. And throughout that, there will be Q&A. And at the end, I'll make sure to check if we haven't covered everything. And then we'll try to get back to you afterwards. On carbon equity, one very complicated slide, but it's really kind of the whole reasoning for why we exist, which is that we know exactly which technologies we need to get to net zero, but many of them still need to get to maturity, to get to cost parity, to scale and to conquer the world. And all of that is done by startups and scale-ups, and all of that is funded by venture capital and private equity. And so we think that by putting more money in those kinds of funds, in those kind of companies, will help accelerate the transition to net zero. So very quickly, there's more or less 4 phases. In concept is the early stage stuff. These are really the breakthrough things. Fortunately, that's only 5% of emissions, and 95% we can do with more mature stuff. Think synthetic aviation fuels or heat pumps that are almost there in price and quality parity. And then the stuff that's there and beyond, think plant-based dairy, solar panels. So funds these companies, that's the most impactful thing you can do. How do you do that? Carbon Equity does that by building fund of funds. And it's a way to do very diversified investing with the best experts into these technologies. So with us, you can invest starting 25,000. We pull those tickets together with other investors, and then we invest into 7 to 10 funds. In total, we've raised 300 million so far from 1,200 investors. We're working with 25 managers. 2 of them are on the call today. And so far, we've helped fund 200 companies, but we're aiming for much, much more. Setting the scene, where are we in climate tech and where are we going? I stole this slide from our friends at RMI because I think it really paints the picture. We are accelerating on all fronts. So we are accelerating in climate change. It's happening faster than we expected. We're already at 1.5 degrees. And also the consequences of 1.5 degrees are worse than we thought they would. But at the same time, we see the mature climate technologies scaling much more rapidly than we thought they would. So on the right-hand side, you see every year the forecast that the World's Energy Outlook gives of how quickly solar adoption will go. And you see that every year that forecast goes up. Last year, 85% of global new energy additions, electricity additions were solar. It's just hard to imagine that compared to 15 years ago. So we're accelerating, and the question is, who will move fastest, the Earth or humans with technology? And then maybe very quickly on what market are we operating in? Climate tech in 2024, a lot was happening. So just so you know, it's already really quite a mature sector with, in 2024, nearly $2 trillion went into clean technologies. That's double what we invested in oil and gas. So in terms of total CapEx spend, we're already past the parity point. When it comes to venture capital and private equity, it's a bit less. It's 40 billion, but it's still 12% of all VC capital in the world. Now, a few other macroeconomic indicators that were hugely important last year, and we'll dive in a bit more deeply in a moment, is the interest rate. It really defined a lot of what was happening. Last year, it peaked at 5%, and just compare that to 4 years ago when we were 0.1%. Very different environments. And finally, it was a pivotal year with 64 countries holding elections, spanning nearly 50% of the global population. So what does all of this mean for the coming year? I can't wait to have this conversation. We have three great experts with us. Ashwin, first of all, he's a partner at Energy Impact Partners, and specifically he co-leads the Deep Decarbonization Frontier Fund. We call them Frontier in short. I'm not allowed to have favorites, but it is one of my favorite funds. Do hugely exciting investments. They fund the really tough, large-scale, high capex technologies. Think iron air batteries, think electrifying cement making, think really high temperature industrial processes, complete electrification. It's the kind of stuff that will transform the world if we can get them to scale. And then we have Esther with us. She is our macroeconomist today. She'll bring the bigger picture of what all of this is happening in. At Rabobank, she really has two roles. So as chief economist, she develops the Rabobank's perspective on the economy. And as head of research in economics and sustainability, she also oversees a lot of the energy transition research. So I think on both fronts, a lot to add to the conversation. And finally, we have Rokas. Rokas is one of the founders of Contrarian Ventures, which is an early stage climate fund, venture capital fund that's been investing mostly in Europe since 2017. And Contrarian invests with high impact in both hardware and software. And so it's very fascinating to get both angles from him. Yeah. And Rokas, actually, I saw a fun fact in your CV, which is that you once upon a time worked for the Ministry of Economy in Lithuania.
I did that. That was a very short stint. That was a very short stint.
Was that a get out
And
fast
then,
kind of experience, or?
no, that was the beginning of my career. I did a short twist of like doing this unique program, which is copycat of DC program, trying to get a brain drain back to Lithuania and trying to transform public sector. Fun fact from that cohort of group of people, there's the youngest minister of economy in Europe, and there's also the youngest European commissioner who was actually responsible for oceans and forestry in European
Wow.
Union. Yeah, so that's a good group, but I went private sector investing rather than policy, but still a lot of great group of people that I met through that short stint of 9 months. That was specifically a very short, straight
Nice.
after graduation.
Finance and then climate investing. Great. I put you on screen. Let's dive in. So let's start with a few rapid fire questions. Love to hear your short take on maybe Ashwin first. What surprised you most about climate tech in 2024?
Yeah, thanks for organizing this. Hello, everyone. And maybe one thing I'm just going to say up front is that I'm going to remain very bullish and optimistic about climate tech investments. There's a lot of reasons to be pessimistic right now. We've seen lots of pullbacks, but we've all seen this movie before. So I remain very bullish for 2025, and maybe we'll start talking about 2024. So what happened in 2024? Surprises. Two probably surprises. One is despite the downturn and despite sort of a lot of negative press around climate tech, I think the market was sort of very resilient. We saw, I think, close to $25-30 billion getting invested in climate tech in just the last 6 months of 2024. So I think it continues to be relatively stable. And then I think the second big thing that I almost don't think most people saw coming was the humongous sort of load growth and demand growth that came from AI computing needs. We had already sort of anticipated power loads coming from manufacturing and industrial resurgence, especially in the US. But AI has taken it to a whole nother level. So I think those are probably like two biggest surprises for me in 2024.
Yeah, and definitely a big uptake in electricity demand in the US. Interestingly, not so much so in Europe. And I'd love to dive in a bit, maybe to why that is. But first, Rokas, what surprised you most in 2024?
Yeah, again, Lisa and Carbon Equity team, thanks for organizing this. Great to be among everyone here on the panel. I think Ashwin touched on good points. I think the distinction again between the polarization of like where the demand comes from, I think it's also cemented. I think markets have probably had a rough year, especially in more developed sort of technologies and climate tech, especially renewables. And that is primarily for first, like we always said that we need to build faster, but we realized that we had a capacity on it. And grid has been the dominant topic that has been in the works for especially developers, combined with some probably negative like catch up in high interest environments. So I think those are two interesting themes, and grid becomes sort of a huge issue for scaling anything. And with this huge demand for electricity coming from places where we didn't forecast it, namely, hyperscalers, that becomes like an interesting space that, we kind of discussed a lot about PowerX, which didn't come online. And here we go, we have this huge outbreak of demand on a different kind of side of equation, which seems to be moving more in a tech pace rather than industrial pace. So industrial demand has taken some time to develop, as we've fluxed, especially in European context, from oil and gas addiction into electrification, as they had a huge shock in 2020, and that shock is still being felt even now, I think, for a lot of especially industrial complex in sort of Germany and France. France is maybe more resilient because they have a nuclear, and they can control the base load better. But I think, but definitely, there's a lot of surprises on the demand side, and I think we're still working through what is actually called an energy transition, and that is taking a bit longer than one would like to. But I think the definitely a huge demand shock is definitely the hyperscalers and that demand that will come online with AI.
Yeah.
So
more electricity demand than expected.
exactly.
That can't keep up. Esther, just out of curiosity, is there anything that surprised you in 2024 you'd like to share?
Yeah, I'm thinking a little bit broader, maybe, but basically, I would say the kind of the shift in politics, which means a different frame, right, for clean tech environments, in the sense that they're still clean tech, but now the political framing around it is more like it helps security, it helps independence from other parties, rather than the emphasis on green. And this is something I think we see in the US, but we also see it in Europe, and we can maybe talk a little bit more about it later, but that's something that stands out for me.
I think that's a great point, Esther. Like, these types of reframings happen every so often. It started off with clean tech 1.0, and then it became climate tech, and then energy transition, and now, sort of the geopolitical things that you talked about. So I think, spot on in terms of that reframing of what sort of drives momentum for the space in general.
And you're at the heart of it.
Climate tech.
So I'm not sure if everybody's aware, but Ashwin's dialing in from the US. So
do I need to be louder?
Moment there. Sorry?
Oh, sorry. Okay, I'm good.
Yeah.
I just thought I was not as loud.
Yeah. So looking forward to 2025, what's your biggest prediction? Rokos, do you want to take it first?
Yeah, happy to. I think continuing on Esther's thought, like I think we just generally live in shorter duration of trends that go through like what we would understand as a cycle. Cycle used to be 10 years, then it got shortened to 7 years, 4 years. Now we're kind of going to cycles, especially in venture, becoming like 3-year cycles. I think there's different leeways to explain that. I think some of the cycle, at least what Ashwin mentioned in the beginning, of some people becoming a bit less ecstatic about it, is purely because I think they don't understand the transition is not like a short cycle. It's not like a hype theme that goes in 3 years and goes down in 1, It's really something that is a very complex nature. It's sort of transitions happen usually in 50-year terms, rather like maybe now we can accelerate with certain technologies that into more 10, 20-year terms. But I think we're in this we're in this kind of bell curve, and we're nowhere sort of even at the peak of it. And I remain very optimistic. And I think the only one missing thing in the market has been that we, in the cycle terms of climate tech, clean tech 2.0, however you want to call it, went a bit ahead of a time, purely because that cycle intervened did like sort of COVID, and SPAC sort of preconditioned that a lot of companies that were not fit to go public went public ahead of their time to be public companies, right? And that distorted our reality of like, where does that cycle started in a way? And I think now in 25, 26, we're going to go through that cycle that some of the companies are actually truly mature to go public. And I think a lot of people have been talking about exits, M&A, and sort of liquidity, especially in the venture community. And I think 2025 year could be a year where we see a lot of different momentum across both M&A, consolidation, a bit of different companies into leaders. So happening between either private equity driven or driven by companies that have been able to accumulate all of cash or able to borrow, and maybe even some companies in US that manage to scale these businesses and be able to go and test the public market. So again, public markets have not been open yet, and it's hard to kind of, I guess, speculate when they will be open. But certainly, I think the maturity of certain topics, especially in renewables that have been around for 20 years, and like software stack, for example, in there, is that definitely getting mature because that became a huge industry, right? So I think I'm pretty optimistic on sort of liquidity profile. Again, we're talking about companies that even been around for 10 years, right? So again, my view is that people tend to have shorter and shorter memory and they try to forget things very quickly. But I think we always have to have this parallel view on sort of what happened before and how that cycle truly looks like. So I remain pretty optimistic, honestly, while the general sort of LinkedIn community puts there and there some doomsday scenarios. And I think it's just the patience of understanding different technology evolution curves and understanding where we sometimes do get ahead of ourselves and understanding how big this one market or this one technology will be, but truly understanding how long it truly takes to scale technologies and put them to market. And then from going from technology to infrastructure deployment is a completely different ball game. And I think we saw that in solar, we saw that in batteries, we saw that in a lot of technologies, and we're probably going to see emergence of some of these technologies that bet venture has been backing for 5, 10, 15 years, even in some cases.
Nice. I like it. So we'll definitely dive into the climate tech learning curves. But for now, you're saying that climate investors are going to start making some money in 2025.
I
Right?
think we need that. I think we need that. I think we need that, right?
Yeah. Ashwin, what do you think?
Yeah, I'm not a short-term predictor guy. If I was, I'd be day trading. But there's a reason I'm investing, in a moonshots fund that's a 15-year fund. So thinking more longer term. But just in general, in 2025, I think what we're going to see quickly is, we've seen a lot. My guess is that we're going to end up seeing lesser investments into newer climate technologies. So there's not going to be another 10 investments in direct air capture or something like that. But I think we're going to see a lot more funding moving towards mature technologies in 2025. So, it aligns well with what Rokas was saying. We've been investing in some of these technologies for quite some time. And the shift is going to be more towards mature commercialization of these technologies, more probably on the infrastructure side. So, and I'm excited for that because we need the first of a kind, the second of a kind, and the 10th of a kind to start happening pretty soon here to make real impact.
Real. Well, it's already real, but much more of it is going to get out the
I think
door.
maybe Lisa, just adding one thought here is I think what I sort of mentioned with my kind of thought process there was like, I think there's going to be more consolidation. I think there is a lot of segmentation in the market, especially if we look at a software businesses. The vertical SaaS tends to have one feature, which sometimes is a bit of a bug rather than a feature, which is small TAM relatively, unless you own the full vertical. So I think there are companies that have managed to become number one, number two in some cases, and capture a large share of the market. And they will continue to sort of horizontally integrate from the beginning of some sort of workflow to the end and become platforms. And I think we haven't had like many platforms emerge. I think the good examples in construction are companies like Procore in US that went public, and it's taken them quite some time to build into 100 to then go to 500 million of ARR businesses. And those only happen when you become kind of de facto the place to do something for constructing or something for renewables, or to become de facto the financing engine like Stripe and generally e-commerce, for example. But there are specialized verticalized type of place in sort of climate. And I think those companies are starting to feel this kind of like, the benefit of being the number one and being able to sort of consolidate certain businesses under their belt to become like really de facto leaders. And I think we need more on that to see more public companies going from this vertical, especially maybe on software side. And on the hardware is obviously, as Ashwin kind of alluded, like there's many steps to become, again, a technology that can truly be scaled in an industrial context. And I think we're going through a lot of those journeys now.
No, it's really interesting. We're definitely gonna dive in a little bit deeper into what does it take to scale and what kind of scaling do we see next year in a minute. I think for now, Esther, I'd love to turn to you to talk a little bit about the macroeconomic context. If you would have to summarize kind of like what characterized the macroeconomic environment in 2024, like what were the most pivotal elements?
Yeah, so I think the important thing that happened in 2024 was that big inflation shock that we've seen in 22 and 23 was kind of going back towards more normal levels. And that was important for, people everywhere, but also for central banks because it allowed them to, to start accommodating the economy and to lower in policy interest rates. So that was, I think, the important feature of the year. Then at the same time, economics never goes without politics. So I would say it's also the year that the American people showed how much they had disliked this inflation shock by voting out the incumbent President Biden, then incumbent President Biden, and voting in, of course, now new President Trump, which brings along a lot of uncertainty, I would say, in policy fields relevant also for climate tech. And also in Europe, we've seen indeed a lot of voting movements in different countries, but also in the European Parliament with a new European Commission. And there, what you've seen, and I already alluded to it very briefly at the beginning, but basically we see at least a language shift from Green Deal to green industry with more emphasis on industry, right? And also actually I would say on green military, which is a whole different kind of green. Yeah.
That's fascinating. So you're saying actually inflation was definitely driving high interest rates, but maybe it was also contributing to certain political outcomes. In terms of that inflation and interest rates, like where do you think it will go in 2025?
Yeah, so I'm of the school that think that basically what we're seeing in expected Trump government policies, that these will be inflationary, certainly the first few years. So scaling back immigration means lower labor supply. So that would mean wage pressure is cost pressure, is inflation. Trade tariffs, those raise the costs for American consumers because everything that comes in the country gets basically taxed. And also lowering taxes, something very important in Trump's economic views, is in the current environment would be inflationary, I think. So all this together means that, basically for the Federal Reserve to lower interest rates much further, there's very little scope. So my expectation is they may make one more step, or maybe not even. So we could be, So,
okay, so interest rates will stay high. Ashwin,
relatively in the US, and then in Europe, I think there's a little bit more room for the European Central Bank to lower rates. This also means that the interest rate differential between the US and Europe will be substantial, and this could also influence the exchange rate between the dollar and the euro, which we already see moving towards what we call parity, so one-on-one value. So that's kind of the financials around this inflation.
And maybe Rokas, sorry if you don't mind, Esther. I just want to make sure that the whole audience is kind of looked into why we're talking about inflation, interest rates.
Yeah.
Would any of you care to briefly explain why interest rates matter for climate tech and climate tech investing? And also curious to hear how much you think it matters.
Go for
Sorry,
it,
Rokas, I think.
Happy to. So I think there's probably, I would split that into sort of three topics. I think generally for venture, I think allocation of availability of capital for the funds from an LP side has a certain impact because people look for risk adjusted, how they kind of deploy their portfolio. In private markets have been generally, with private equity and venture capital, been benefiting from a ZIRP environment, a lot of flux, given that the kind of ZIRP environment had low interest rates and people were looking for yield. That's one bit. So LPs, I think on the GP side, obviously risk tolerance and kind of ability to allocate capital, given on the kind of risk profile of companies, and then risk profile is directly impacted by interest rates for certain business models. So I think everything that was sort of hardware or related that had CapEx intensive businesses have greatly benefited from it. So we saw the scooters being financed and all different sort of business model that had CapEx involved in that, and that kind of really vanished as the interest rate environment changed. A lot of companies took venture debt, meaning more debt-like type of instruments, which again have a negative connotation for companies when interest rates start to increase, especially if they haven't been fixed or we're on sort of floating a rate. And general availability of venture debt has been sort of neglected purely because the expectation for rate, like the kind of interest rate for those type of products have drastically increased, and the business models don't allow to sort of cater for that debt and burden of interest rate unless it's sort of some sort of very structured products like payment in kind where you pay interest rates at the end of the term of the loan. Generally for climate, obviously that had intervened in sort of aspect when like climate, let's say 2.0 to start to take place in 2019, 2021. Obviously we're going out of that ZIRP environment, like 2020 was a peak of it probably in 2021. And now we're going into stabilization. I think there are two tailwinds that we're going with interest rates. The more mature industries such as infrastructure owners and asset owners, call it, batteries, solar, wind deployment, we had these sort of issues where we had to basically think through the logic of how we're going to finance these assets because they scale through a basis of very low LTV and when the kind of interest rate environment changed, these business models were broken for one reason. They had very low gross margin. They were very thin margin to operate on sort of interest rate basis. And I think a lot of those business models have completely been kind of dissected in the market terms. We saw a lot of solar businesses, especially residential, have struggled in public markets and private markets, both across US and Europe. And I think multiples for a valuation standpoint have also drastically been impacted. So if we look at SaaS multiples in 2020, 21, like they went to extremes of like 40, 50, even in some cases 60, 70x of annual recurring revenue that have really adjusted recently according to the growth rates. Obviously, demand also went a bit because it was very drastic. Everyone was trying to buy software, everyone was going remote. So that also normalized. I think everything just generally normalized from that kind of peak of 2020, 21, which was mainly driven by kind of free capital and ZIRP environment. And I think we're just going into a normalized setting where we cannot completely bet on cheap, available, ready capital. We're betting not on a pure tailwind of, I think, government policy and free money given away to people to subsidize models that maybe should never exist if they cannot have economical sense. And we're going to normalization of how businesses should be valued, right? And I think there was a lot of that detachment from what the future holds. I think there is a saying in public markets, buy the rumor, sell the news. So I think a lot of investors bought the dream and sold the fact. And I think in 2024, we started to see people selling the fact that these businesses have not delivered on the dream that they were promising in that environment. And I think now we're going to normalization of where people are looking at facts and looking at revenue and top line and gross margin. And I think that should be the normal. So I think we're just going into something that is, if we look at like back from 70s, we're going into an area where we're sort of trying to go into long-term goal of central banks to contain inflation, stabilize unemployment, and have rates that adjusts for a long-term like 2% rate, inflation adjusted. So I think that's kind of where we're heading into the next couple of years, depending on where inflation goes. And inflation is very much like interest rate inflation. I traded inflation actually as a trader in Merrill Lynch. So the kind of determinant of like long-term inflation is what the central banks look like. And that is a five-year swap. And I think Esther probably know what that is. It's too technical to explain it here, but it's like 5-year expectation of where 5-year inflation will be in the next 5 years. And I think that's kind of the central bank kind of looking forward to align that. So I think we just went through a bit of a roller coaster and now we're trying to go to the mean. And I think that's good for the market because people can actually adjust their business model for the next 3-5 years according to those. And that takes out the ambiguity of the equation for both us as investors and for both the companies that are trying to plan.
Yeah. Esther, do you agree? Are you still mute?
There was a lot to agree on. I just wondered if so, because I think there's also this interaction between what's happening. You know, clean tech is driving energy transition, and that in itself can also have its influence on inflation. So it's not just, you know, one way, it's two ways. But maybe that's a little bit more longer term view, and I can imagine you'd like to focus on 2025.
Yeah, understood. You already talked a little bit about the elections, Esther. Are there other effects of these new governments stepping in that you expect will affect climate tech in the coming years?
Yeah, so yes. So I think one thing to certainly watch is, of course, what tariffs will do, because basically well, it's not only tariffs, it's basically not using policy to help your economy, but using your economy to achieve other goals, political goals or security goals. Basically, that's what we call it statecraft, and that's what we see happening in the US, but I think also a bit more already in Europe. And that's, you know, can go many ways. So it will certainly bring a lot of insecurity and thereby driving volatility in markets. But also, for instance, when we see the US and Europe taking measures against China, that can be in fields that very much address, that very much touch climate tech. And you can see China taking measures the other way. And it could go, you know, in friendly ways or in unfriendly ways. So, for instance, we see China, we see now CATL, which is this large battery Chinese battery producer. We now see them linking up with Stellantis, European car maker, having a joint venture in Spain, building a battery factory. Well, that all sounds fairly friendly and win-win. But you can also see sometimes, for instance, Chinese using their power in the markets to, for instance, provide a lot of raw materials to a market that is trying to build their own production capacity.
Yeah.
That way distorting economic processes. And yeah, how this will go is, of course, very uncertain. So I think it's I think we will probably see a lot of distraction from the longer term trends in the coming year by all these kind of.
Going to be a little bit more. I think McKinsey, they always say we can have an orderly transition or a disorderly transition. And the longer we wait with doing an orderly one, the more likely it is we'll have a disorderly one. Maybe one more point I think is super interesting to talk about is 3 years ago now, Biden implemented the Inflation Reduction Act, which was the biggest climate tech bill ever. Now Europe is expected to respond in February. They'll publish the, what's it called? The European Clean Industrial Act. Is there anything you want to share on what you expect from that, Esther?
Yeah, so to be honest, we don't know all yet. So there is there's the net zero industrial package that has already, you know, been going, and we've seen some movements there. For instance, widening the scope to include nuclear and to include CCS. But I think the broader package is much bigger, right? It's about providing more regulatory certainty. It's about refocusing EU funds to clean tech. It's about investing in skills throughout the whole EU, and it's also about the importance of trade agreements. So what you'll see is that Europe will try to, in its international trade agreements with other parties, will also try to think about how to secure, for instance, critical materials with friendly parties. And so, yeah, have a more strategic scope for those kind of relations. And yeah, all in all, I think it should help to provide more direction, because yeah, what we see now is that a lot of technology is there, but actually demand is not certain enough for investors to feel free to step in. So yeah, we hope, of course, that this package will provide this higher level of certainty of direction, so that market participants can act on that. But I cannot promise because I haven't seen it.
No, and then nothing has been published. Maybe you had a glass ball. Let's turn a little bit to technology and talk about some excitement there. First of all, Ashwin, what for you was like the biggest climate technological breakthrough in 24?
Yeah, I think 2024 was probably the breakout year for geologic hydrogen in my mind. Maybe not quite a technological breakthrough. I mean, it will be a technology breakthrough in terms of how it's resourced. One of our companies in the space, Coloma, is a pioneer and is sort of leading the way in economically identifying ways to extract natural hydrogen from the subsurface, just like people would extract oil and gas from the subsurface. Think about this as where you can use the expertise that's been built in the last 100 years in the oil and gas space, and then bringing that to geologic hydrogen and ability to tap that hydrogen and being able to provide that. We think that could be a really big sort of a game changer in the market. And 2024 was definitely the breakout year for geologic hydrogen.
Okay, that's good to know. So maybe for the audience, I mean, it's not until quite recently we discovered there's probably 1 trillion kilograms of real, like natural hydrogen already underneath the Earth's crust. It might even be replenishing. But the big question is, can we get it out? And the companies that are working on this are being very secretive because they're in a very high competitive environment. So I get to read very little news, but Ashwin, is there anything specific you can share about the technological development, or on a scale of 0 to 10, how likely do you think it is we'll be able to get it out?
Yeah, I mean, I think at least the early results indicate that the presence of hydrogen and the ability to extract the hydrogen, it's not about extracting at one time. Just like gas, you want it to flow over a longer period of time to make the upfront capital investment worth it. And so the teams at Coloma and other places are doing a lot of work above ground where they're characterizing the subsurface, making sure that they can bring in technology from the oil and gas world to make sure that they truly understand what the potential of a specific sort of area, geologic area is before they start spending a bunch of money, putting drilling rigs to extract the hydrogen up. And then also hydrogen generally is also present or helium is present with hydrogen. And so some amount of work has to be done to separate the gases. So there's a bunch of technology innovation that's happening in that area as well. But on a scale of 1 to 10, I'd say we're probably 6 or 7 right now. And there's still a ways to go to make sure that we can extract it out economically and flow hydrogen for a long period of time to make the capital investment worth it. Yeah.
It would be a big game changer if we're able to do it.
That's right.
For you, what was the biggest technological advancements?
I think everyone speaks about AI, right? Like what sort of AI can do for the sector, not only from a data center standpoint, so sort of the shovels on the gold rush, but actually the gold rush itself. So I think there's one characteristic that prevented us from being fastly innovating in certain more like hardware technologies, which is called iteration of different, as you go among different sort of versions of technologies, you scale it through TRL. I think what the physical world meets the digital world can help here is obviously availability of data in that infrastructure to do and trial different experiments is honestly very fascinating. We've done that in the kind of healthcare sort of like biotech space for trying to find new drugs and develop them and take them through through clinical trials. I think the exact same is going to happen in our physical materials world, and I think there's a lot of very interesting companies that are disrupting the mining space from different angles that solves not only for the price, the novelty, maybe of some of these materials like rare earth metals that can have certain geopolitical aspects, like China owning quite a bunch of that and having something specific commodity subset ownership of something that can induce certain supply chain problems or geopolitical problems, as we've seen in kind of the past 100 years in the oil-driven economies. Majority of the wars follow where oil is, and hopefully that wouldn't happen in this transition as we follow the materials that enable this energy transition. So magnets, different rare earth metals, these are critical elements for us to be able to sustain industrial companies like in automotive industry, And I think we have one portfolio company, but there's different ways to play it. So there's a company called Cobalt Metals in the US. It's helping to find novel places to dig these type of materials from sort of as a mining, and it's just unique business model and way using sort of different data points to identify these locations and do it in a way, in more iterative way, and do it faster. And then there's other ways to do it. This company that we invest is called Altro, that is basically using the kind of symbiosis of robotics and sort of an iterative data model to identify novel compounds that can turn out into similar materials that can be used for example, they focus on specifically on producing magnets. And that is quite unique, honestly, because the one word that you should take away from all this bunch of words that I say is velocity and speed. And I think we need velocity and speed of making different experiments. And I think while we have a lot of different research universities doing that, but the speed at which we're doing it now with the help of software is just unprecedented. And if you combine that with partially automation, just for you to understand, they're doing 100 experiments with novel materials a week. That used to take like years, sometimes months, maybe months, sometimes year, depending on the complexity. Now they can do it 100 a week. That's honestly insane. And they're just ramping up their team of 7 people. I imagine if you scale that in terms of lab availability and people availability to dissect that data, and you get industry to collaborate with them on, because a lot of these materials, they're not completely inventing something new, unknown. They're trying to replicate what exists in rare earth metal used for specific magnet for companies like UV or Bosch or others, and trying to find an alternative way how to produce that with the same specifications. So it's honestly fascinating because it solves not one climate issue, but it solves independence, geopolitics, and ability to synthesize anything in a lab, which is honestly feels pretty cool and useful. And ideally,
I fully agree with you that AI for material discovery and generally for R&D is probably the biggest contribution it can have for climate tech. At the same time, it uses a ton of energy. Ashwin, you already alluded to it in the introduction. How do you think this increase in electricity demand in the US will affect climate investing? Like what's going to come online? What's going to grow?
Yeah, I mean, I think the increased demand, I think it's a great question, which is around opportunity cost of the next green electron is sort of how I think about it. Where does it go? Does it go towards AI? Does it go towards, the resurgence in manufacturing and industrial sort of operations for these next generation climate tech companies, green cement, green steel, whatever it might be. So it's definitely an area that we've been tracking. We sort of go both ways. I mean, AI is sort of, we think is needed to help sort of speed up the process, as Rokas was just mentioning. But we also think it's important to be able to, send those green electrons to be able to produce green steel or green cement. So the final answer in this is that we just need to be producing more clean, green, abundant electrons. And for that, we continue to stay very excited about advances in geothermal. And we're seeing a resurgence in nuclear fission in 2024. That was a big sort of area, and we think there's going to be a lot more sort of investment, not just into existing nuclear fission technology, but also next generation SMR type technologies that will really help us get to that clean, green, free electron world.
Yeah, exciting stuff. We got so many interesting questions from the audience on climate tech. So one I'd love to pose, whoever wants to pick it up. What are overlooked sectors? What are underinvested themes?
Yeah, I'm happy to go first. I mean, I think nuclear fusion is a little bit overvalued. There's a lot that's gone into it. People have spent a lot of money into nuclear fusion. The one that's undervalued, and my view is that if we had spent the same amount of dollars there, we'd be in a much better position, is geothermal. We just haven't spent as much investing into geothermal as an opportunity. There's been a massive amount of advances in our understanding of the subsurface, and especially from the oil and gas world. And I always think about, how do we take the talent that's already out there and then leverage that talent to do new things? And geothermal, geologic hydrogen, all of those are interesting areas for that. And continue to believe geothermal is one of those underinvested areas, and we need to do a lot more of.
I couldn't agree more, and I'm happy it started increasing a bit in 24, but let's hope that persists. Rokas, any views?
So overinvested,
Underinvested.
underinvested.
You can also do overinvested.
I think Ashwin said
Another question from
overinvested
audience.
first, so I think overinvested probably was carbon capture for me, because I think not necessarily it's very different ways how you can look at it, but I think especially the ones that are sort of e-powered, or where you need, for example, hydrogen. I think we haven't figured out hydrogen, and then we're jumping in another sort of issue. And I think the price point just kind of never made sense. And I think the learning curve is not yet sort of validating. Not being overly bearish, but I think there has been, like, honestly, a lot of companies funded in the space with somewhat questionable unit economics. And I think unit economics is probably the primary one that you should be looking at these business models as they scale. Underinvested, I'm tempted to say biodiversity, but it's not an easy place to invest. Generally speaking, I think we've seen some, not great things through 2024. I mean, like the floods, the droughts, the kind of fires, like this is really happening as we see. A lot of it is from, again, like a lot of regulations being put forward in biodiversity as well. I think the willingness to pay is sort of somewhat subdued from kind of push of governments. And I think that stems from a lot of different things, as you mentioned, politically, like net zero lines. Look at, like, Trump has just like made the magic wand, and everyone, all the banks have left that, right? Like overnight, just because they need to work as businesses as well. And sort of that like effort of 4 or 5 years has been broken in like 5 minutes sort of situation. So I think that is still not an easy necessarily place to invest, but that's definitely a one that is underinvested. Other places underinvested. I think we still have a lot to do on sort of industry decarb, and I think aviation, or like specifically shipping, is the two big elephants in the room. I mean, there is no price of like how even the current commodities that are not fossil free, like oil and gas and minerals, are being sort of, valid on sort of their carbon intensity. It makes a difference where it's being upstream produced and what the product is. And even putting a carbon price of how shipping impacts that carbon footprint, like supply chain visibility, is definitely areas that are underinvested, lacks tools. When they lack tools and they're underinvested, they lack actually the impact that they could create. Because if you have the full supply chain transferability, like there's so many things you could do from a policy standpoint. And unless you basically, if you don't have these tools, then you're just, hallucinating on the policy, because you will put like forward like impossible to reach expectations, and there isn't then technology to kind of like reply to those expectations. And I think some of these sectors, like shipping and kind of aviation, have been like sort of in these crossroads of situations. Like would like airlines like to decarbonize? Absolutely. I think as long as it doesn't impact top line or increase the pricing for their customers. Therefore, like technologies there will, one way or the other, have to be solved. And I think there's only a handful of ways you can do that. So I think I remain very bullish. And while there was a bit of a sort of like a short-lived hype cycle in some of these areas, I think that wasn't, in my view, hyped. It was just that people need a bit more time to build in these areas. And I think there's going to be a tremendous outcomes. People tend to forget that these markets are like, 200 to 500 billion annually traded in terms of commodity. That's not nothing. And I think if you capture it at 0.1%, that's the type of venture outcomes that we're looking for to invest.
Yeah. One question we got from the audience, I think super interesting. We just talked about the grid that can't keep up with, well, the whole energy transition. Do you think the grid, and specifically grid tech, is underfunded? Is there more opportunity there than we're currently leveraging? Esther, you unmuted. Do you have an opinion?
Not specifically for this, but yeah, so I'm not sure if it's underfunded, to be honest. But what we see in the Netherlands is entrepreneurs also, coming with solutions that are clean tech, but also our solution to the congested net. So for instance, battery system, pretty large battery systems that help firms that don't get from the grid what they need to operate. And then, so those kind of things, in an intermediate period, I think, see more of that. Yeah.
More batteries. Ashwin?
Yeah, I mean, I think it's, as you know, EIP is backed by a lot of utilities, so we sort of get to see firsthand the impacts of grid congestion and how these utilities are thinking about innovation and integrating technologies. Utilities really initially think about safe and reliable power to their customers. That's their number one goal. And so they think a lot about that, but they're trying to make sure that the innovative technologies and the grid technologies that are out there, when they integrate them, they don't cause any sort of any issues as it relates to providing that reliable power. I think, one of the things that's probably going to happen over time is that that grid-related items are going to become more of a national priority, national sort of security type thing. You've seen some of this happen in China, where they've been able to sort of make sure that, they can run HVDC lines from the middle of nowhere to Beijing or places like that. And that's what's going to happen, at least my guess is that might happen in the US, where, we have a lot of opportunity to produce wind and solar in the middle of nowhere. We just have to be able to take it to places. And those require us to overcome NIMBYism or not in my backyard type of approach, and requires a community effort to get the power from low generation to where the load centers are.
Yeah. Do you think that might become easier under the current president?
Anything is possible.
We got another really nice question. It is a tough one, but let's see if any of you has a view. Are there any specific sectors or technologies that you think will reach an economic tipping point next year? Like, which ones should we be watching out for?
It's a tough one.
I think I mean, like, grid storage is one that I think is getting to be very economical already, and at utility scale for sure. So I expect it to be fully economic in 2020. I mean, it already was in 2024, and it's only getting better in 2025 as the cost of LFP and the batteries start to keep going down. I think it's already there.
Yeah, lithium batteries just keep getting cheaper, right? It's 20+%
That's right.
this last year.
Yeah. I mean, there's a few fires. We just actually had one in the last few weeks in the US, but those were not lithium. Those were lithium-ion batteries, but they were using NMC chemistry. But they're much more safer sort of approaches, and we do think that that's going to be the one that's for sure this year economical. At large scale.
Cool. All right, we're already approaching the last minutes of the webinar. I'd love to spend a little bit of time on the capital stack for climate tech. I think you both already pinpointed to it. Ashwin, what do you expect and what do you hope for the climate capital stack and how it will develop for next years?
Yeah, I mean, I think we continue to stay very excited about early stage moonshot ideas. We think that that's important for us to get to, commercialize those technologies and help us get to our net zero goals in different ways. And so we will continue championing that. But as a platform at EIP, we think about supporting entrepreneurs throughout the throughout their journey. And as I mentioned before, there is going to be a lot more sort of shifting in capital towards growth stage and towards mature companies, more towards the Series B, Series C side. There's a lot of capital being formed, especially in Europe right now, for growth equity investments and later stage investments. And we see the capital stack really maturing to solve for first of a kind gaps or missing middle gaps in 2025.
I like that answer. Something I've been very worried about. Rokas, do you have anything to add?
I'll merge the two questions that you asked before, and that'll be not a technology, but a bit of a more conceptual. I think there will be a price point attached to independence as a construct, sort of. So independence for paying longer or waiting for longer payback for having that independence in the first place. I think a lot of the infrastructure has built that way back in the past. Like we're talking big infrastructure that we're not on like 3-year, 5-year paybacks. they were critical. And I think critical would actually mean something in the context of both Europe and US and other countries, honestly. And grid stability, Ashwin touched briefly upon. I think that's definitely one that comes to mind. But I think also orchestration of electron traditionally has been a concept within the grid as being something that is an accounting problem. You could like actually produce an electron, put it back to the grid, and that like they balance it out somehow. I think we're going to start seeing physical. You want to actually know where this electron is going, and you want to be mindful of where it's going because the grid has become more and more congested. And therefore that allows for like some very interesting business models to emerge. And the capital stack for that, as sort of, I think is we're backing a lot of the early stage technologies that will become infrastructure of tomorrow. And I think infrastructure financing, generally speaking, is going to be a big topic in the next 5 years. A lot of we've seen like the BlackRocks, the big funds kind of pouring a lot of money into solar and renewables, but we're going to start seeing emergence of novel type of infrastructure backers that go to back up novel technologies, that go back non-standard, non-bankable technologies, because someone needs to do it. There has to be a first. I've actually in my life had a short stint when I worked with one of the aviation groups, and I've actually met the guy who did the first leasing transaction in the US. And there was a person that did that transaction. No one bank would touch it. There was still a risk with Airbus, like how would someone hold a balance sheet? There is a lot of these technologies that become now infrastructure backable, and they have to be financed, and someone needs to create that whole market in financing. And I'm very bullish that if banks are not taking that, someone else will. And I think that some of these infrastructure investors, like novel infrastructure investor, will start to understand that risk and underwrite that risk. And I think that is definitely something that we should be watching in the next year, as that capital stack would be changed.
Yeah, I like that a lot. So at Carbonect, we have both VC fund of funds. We also have an infra fund of funds, and infra will fund the fifth plans onwards. And with VC, you can maybe do a bit of the first financing, but number 1, 2, 3, and 4, we need to get them built, and someone needs to take the risk. And hopefully there will be sufficient upside on the other end of that.
So hopefully, hopefully if governments start to validate that and chip into that equation of capital stack,
yes,
in the right,
I very much agree.
In the right instrument.
The government will follow after what happened under the Biden administration there. Esther, there was one question from the audience on how should we read banks stepping out of the Net Zero Banking Alliance? And on top of that, where do you expect banks to play in the coming years in the energy transition?
Yeah, so this is of course an obvious and important change in mostly big US banks. I've seen Dutch banks stepping out of the Net Zero Banking Alliance recently, although maybe one I'm thinking of, not my bank. Yeah, how should we read it? I see it very much in the political context, but also in terms of I think there's a bit of technical discussion behind it. So it's about what they can promise in what way. From what I see in my more domestic circle, I see banks still very committed to the climate commitments they made, and I see colleagues providing loans in the bank, making tough decisions every day where they try to balance risk and rewards as they've done for 100 years, but now also balancing it with sustainability goals and commitments. And it's not easy. From our research, we try to contribute by doing estimates for what certain interventions can mean in terms of emission reduction, for instance. I think this will remain a struggle for quite some time to come, but also, one that many banks still remain committed to, I think.
Work in progress. We're almost at the clock. I'm going to ask you one final provocative question, and it has to be a very, very short answer, but is now a good time to invest in climate tech? Who wants to go first?
I honestly think the next 10 years is one of the best invest in climate tech. I think we always sort of joke that 2030 is the first test. It's not 2025. 2030 is really when you see demand kind of come up. And I think when things get crowded, I think it's not really the best time. And I think I love the skepticism that has been in the last couple of months or quarters. And I think that adds to the equation that people truly that want to build, and we sort of avoid a bit of tourism in all sort of different places. So I think that tourism now transferred to AI, so I'm pretty happy about it.
We can finally get to work. Ashwin, what's your take?
110% agreed that that was the right time. I mean, we have amazing tailwinds, even with the rollbacks. The size of the opportunity just keeps growing every single day, and now we've got all this new stuff coming in. Good entrepreneurs will know how to make sure that they sell companies and technologies to customers in an economical way, and make sure that they're profitable. And so we remain very committed and excited to be continuing to invest in moonshot companies.
Thank you. I appreciate that answer. Esther, anything to add?
Yeah, I prefer a long-term perspective to this question, but I think, global demographics point towards fossil fuels becoming less and less interesting over time, and economics point to green technologies and the energy transition happening, and the business case, becoming already being attractive for some technologies and becoming more attractive for others. And surely there will be technologies in between failing, but that's part of the game.
Yeah, I mean, just to add to Esther.
Okay, final.
Yeah, I'm just going to say, what's most important is that customers really want this. There's customers that I think reason for hope, and as Esther pointed out, the demographics are key, and they will drive this energy transition and get us to that net zero world. So we remain excited about it.
I like it. Wonderful. Thank you so much, Esther, Ashley, and Rokas. I really appreciate the conversation, and have a great day.
Thanks so much, Lisa.
Thank you.
For moderating.
Bye-bye.
Bye, everyone.